to Tax File. I am your host, Laure Bala Hassan, and we're glad to have you with us for another engaging and informative episode. To start, we'll bring you the latest updates in the world of taxation, keeping you informed about developments that matter to you. Next is our Did You Know segment, where we share insightful tax facts that can help guide your everyday decisions. After that, we head out for our Vox Pop segment, capturing the thoughts and opinions of the public on key tax issues. We'll explore those perspectives further in the Knowledge Zone, providing clarity and helpful explanations. Our Professional Insight segment also features experts who simplify complex tax matters and offer practical understanding. And before the end of the show, What's on the Net showcases reactions, questions, and comments from our online audience. There's a lot ahead. Let's get started. And now, the news. The Joint Revenue Board, JRB, has dismissed claims that obtaining a tax identification number will lead to automatic deductions from taxpayers' bank accounts. The clarification comes as more Nigerians begin retrieving their tax IDs through the newly launched national portal. Ejura A2 Okpanachi has the reports.
Executive Secretary of the Joint Revenue Board, Mr. Olusegun Adesokan, has described as false and misleading the claims that the tax identification system would allow banks to automatically deduct money from taxpayers' accounts. He said the speculation surrounding arbitrary deductions and automatic taxation was completely unfounded. He commended taxpayers who have embraced the reform, noting that the tax identification system was introduced to strengthen revenue administration while supporting economic growth and providing incentives for low-income earners and businesses. He explained that the portal, jointly managed by the Joint Revenue Board and the Nigerian Revenue Service, serves as Nigeria's centralized tax database and was designed as a secure self-service platform with strong data protection safeguards in line with regulations of the Nigerian Data Protection Commission. According to him, individuals can retrieve a unique 13-digit tax ID using their national identity number, while businesses can access theirs using registration numbers issued by the Corporate Affairs Commission and other government agencies.
The Nigeria Revenue Service (NRS) has projected 40.7 trillion naira in revenue for 2026 fiscal year, largely driven by improved oil production and ongoing tax reforms. The executive chairman of the service, Zak Adedeji, disclosed this while appearing before the House of Representatives Committee on Appropriations to review the 2025 budget performance and present 2026 projections. Hussein Ibrahim reports.
According to Adedeji, recent tax reforms transferring petroleum and mineral royalty collections to the NRS has significantly expanded the agency's revenue base. He also noted that the oil production is expected to rise from 1.7 million barrels per day in 2025 to 1.8 million barrels per day in 2026, which is expected to boost revenue. The service also reported surpassing the 25.2 trillion naira revenue target for 2025, recording 28.23 trillion naira in collections, representing about 12% above target. Much of the growth was driven by non-oil tax revenues. Wale Edom, Minister of Finance and Coordinating Minister of the Economy, said the administration of Bola Ahmed Tinubu inherited a difficult fiscal structure but is implementing reforms to restore macroeconomic stability. Lawmakers, led by Abubakar Bichi, chairman of the House Committee on Appropriations, said the engagement was necessary to properly scrutinize the 2026 budget projections and provide Nigeria with clarity on revenue performance.
Nigeria has recorded a major boost in non-oil revenue, with value-added tax collections rising significantly in the third quarter of 2025. Latest figures from the National Bureau of Statistics highlight improved tax performance driven by ongoing fiscal reforms. Evelyn Shija has the reports.
The federal government generated a total of 2.28 trillion naira from value-added tax in the third quarter of 2025, according to a new data released by the National Bureau of Statistics. The figure represents a 10.66% increase compared to the 2.06 trillion naira recorded in the second quarter of the year. On a year-on-year basis, VAT collections rose by 28.10%, reflecting stronger tax administration and improved compliance amid ongoing fiscal reforms. A breakdown of the figures shows that local VAT payments accounted for 1.12 trillion naira, while foreign VAT contributed 680.23 billion naira, and import VAT stood at 479.79 billion naira during the period. Sectoral analysis indicates that manufacturing led VAT contributions with 25.89%, followed by the information and communication sector with 18.77%, mining and quarrying with 14.85%, administrative and support services recorded the highest quarter-on-quarter growth at 89.28%, while arts, entertainment and recreation grew by 82.49%. However, the report also shows a decline in some sectors, with real estate activities contracting by 51.33%, while activities of households as employers and other service-related areas also recorded negative growth. Analysts say the strong VAT performance underscores the increasing role of non-oil revenue in financing government activities and supporting Nigeria's fiscal sustainability.
And that's a wrap on the news. Let's join Mariam on the Vox Pop segment.
Hello and welcome to the segment. My name is Mariam Julde Adura. Today we're in Mabushi. We will be finding out the consequence for failing to self-assess under the new Tax Act. Come. Under the new Tax Act, what are the consequences for failure to self-assess?
So, under the new Tax Act, any taxable persons that fail to remit or even just refuses to submit their tax, they'll be liable to administrative assessment.
Okay. And what does this administrative assessment entail?
This administrative assessment means that the NRS or any tax authority would with the available information, be able to give them any tax that might be deemed fit to the taxable person.
The Nigeria Revenue Service can impose a fine of 100,000 naira in the first month and 50,000 naira in subsequent months.
For failing to self-assess.
For failing to self-assess and file tax returns.
Failure to file under the new tax law is that the Nigeria Revenue Service can take the person to court. And when the taxpayer is taken to court, whatever the judge rulings stands or something, whatever happens, whatever the judge says, that's what's going to stand.
What are the consequences for failure to self-assess under the new Tax Act?
From my understanding, the tax authority might carry out enforcement activities such as freezing of bank accounts, restraint, or appointing collection agents to go after outstanding liabilities.
So when tax is not filed or paid when due, interest can be charged and most likely going to be more than the tax supposed to be paid initially.
One of the consequences for failing to self-assess is that any taxable persons that fails to remit or file their returns will be liable to administrative assessment.
And what does this administrative assessment entail?
An administrative assessment is an assessment based on whatever information that is available to any tax authority, such as the Nigeria Revenue Service.
know a taxpayer who fails to self-assess or self-account for tax within the time prescribed by the law becomes liable for several statutory consequences? For more information, please visit www.nrs.gov.ng.
Ashu Abe takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into interesting conversations had on the streets. I remain your host, Ashu Abe. On today's episode, we'll be talking about the consequence of failing to self-assess or account for tax under the new tax law. Under the Nigerian Tax Administration Act 2025, a taxpayer who fails to self-assess or self-account for tax within the time prescribed by law becomes liable for several statutory consequences. First, the taxpayer must pay the principal tax that was not self-accounted for. In addition, the law imposes an administrative penalty of 10% per annum of the amount not self-accounted for, together with interest calculated at the prevailing Central Bank of Nigeria monetary policy rate. These charges are intended to compensate the government for late payment and to discourage non-compliance with the self-assessment system. Furthermore, the law provides criminal consequences where the failure amounts to an offense. Upon conviction, the taxpayer may face imprisonment for a term not exceeding 3 years or a mandatory fine of at least the principal tax due plus an additional penalty of up to 50% of the amount, or both imprisonment and a fine. These sanctions reinforce the obligation placed on taxpayers under the self-assessment regime to accurately declare and account for their tax liabilities and ensure compliance with the Nigerian Tax Administration framework. Over to you, Laurie.
And now to our Professional Insights segment.
So my name is Tala Fakolade. I'm the director of the National Single Window Project. And honestly, I've used this opportunity to also, for those who don't know, to just talk a little bit of what the single window is, just as a definition. So the single window is a central platform where it's like a one-stop shop for all import and export processes. I think that's a simple way to put it. So today, importers and exporters, they have to go to different systems, different agencies to complete their regular, their import and export processes. And single window is just one platform, one-stop shop where they can complete all regulatory requirements to import or to export. And that also includes the payment that comes with those regulatory requirements. That's what the single window is in a very simplified definition. So I lead the National Single Window Project, yes. So I have a team. We have a team, and we also have consultants, technical partners that work with us. So it is the overall program, I think, is split into two. There is the project, which is very timed. All projects are timed. The project will run till next year, sometimes the middle of next year. So that will be the project phase. And then there is the operating phase. That hopefully will continue to run after that, which is really the management of the single window platform. So the single window is a key trade facilitation tool. One of the ways it does that is simplification. Single window tries to, with the platform, we try to identify a lot of inefficiencies in the system, reduce human interaction, and make sure that there's a more streamlined process that's going to make the process of import and export faster. Import and export is a key component of trade in any country. So really streamlining that process is one of the benefits of the single window. And you know what? when processes are streamlined and things are working well, automatically, what's the output of that? Revenue will actually increase for the country, because it makes Nigeria an attractive destination for investments, where there'll be more foreign direct investments. A lot of goods that are diverted to neighboring ports will come back to the Nigerian ports, because our ports will now be more efficient. And one other benefit of single window, which I think is actually a very key benefit, is the transparency that comes from single window. With all processes, all documentation, all data going through the single window, there's a lot of visibility to really understand, the key drivers of import and export processes. Single window is one of the tools that can really help Nigeria to become a major trading hub. And when I say Nigeria, I'm referring to our ports. Our ports are the gateways for trade, either at the air cargo port, land borders, or seaports. They are the main gateway for trading in any country. So if our ports, our processes at the ports can be more streamlined, it's really going to be a magnet for a lot of businesses that have left to come back, or for new businesses to come into the country. And we know that's really key for the growth and for the economic development and revenue generation for the country. So single window will play a big part in that process. Yes, so I'm really looking forward to it, even though there's still a lot of work. We've broken the project into 3 phases. The first phase is what will be going live on the 27th of March, 2026. And then the subsequent phases will roll those out over the next 9 months or so. So what does going live mean? Going live means that part of the process today, when it comes to issuance of permits and licenses, import permits and licenses, those will now be done on the single window. So today, if you want to import something, a good, you have to go through, the agencies that regulate them to get the permits, NAFDAC, SON, Quarantine Service, and all that. Now, from the 27th of March, importers will only come to the single window to complete all those applications. So, yes, so from the 27th of March, import licenses and permits for NAFDAC, for SON, for Nigeria Agricultural Service, for NESRIA, all those will now, you can make those applications on the single window, and the approvals will also be, be done on the, will happen on the single window as well. So that's one of the major changes. The other one is manifest submission that comes from the shipping lines and airlines. Cargo manifest submission will also happen on the single window. Today, shipping lines have to go to, they have to submit their manifests with customs, with MPA, with NIMASA, with terminal operators. Again, submitting in different systems, sometimes with different formats. What the single window does, the shipping lines only need to come to the single window, submit their manifest once. The single window will automatically distribute this manifest, transmit this manifest to the agencies that require them, like customs, MPA, NIMASA, and other agents. So it's part of the simplification that single window is bringing. So those are some of the changes that you see from the 27th of March. Oh, thank you. I think we've had, for us to be here, for us to be ready to launch, that means, we've made good progress, and I'll say those are. And I think the first success for me is actually we've built a really great team, both in terms of in-house team as well as the consultants that we've brought in. We've brought in Crimson Logic of Singapore. They're like the #1 company when it comes to single window application development. So we have those kind of partners. We have KPMG, and then, like I said, we have in-house. So I think the team that is working on this is really one of the successes we've had. The other success I think we've really had is really streamlining the import and export processes. The first thing we actually did was to actually document the current processes. We worked with all the agencies. We documented the current processes, and then we identified the inefficiencies in those processes. And then we worked with the agencies to develop what you call a future state process. And it is that future state process that we've developed on the single window platform. So we think that's also like a major milestone. One thing I forgot to mention about the team is that our team also includes representatives from all the agencies we work with. So we have people from customs that are part of our team, NAFDAC, MPA, FAN, SON. Think about all the key agencies that are part of our trade facilitation. I think one other success is, we've conducted a lot of stakeholders engagement and ensuring that stakeholders understand what is coming, and also training of the key users of the single window platform. We've been doing that extensively over the past couple of months. So I think those are some of the key milestones and successes we've had. You asked about challenges. I mean, projects will always have challenges, I think one of the challenges was, sometimes a couple of agencies was difficult to let them see the vision and bring them on board. I think people were, some of them were a bit apprehensive about what does this mean to me? How does this impact me? Does this impact my job? So we had to do a lot of sensitization to ensure that people are educated. This is a collaborative effort amongst agencies. We are not using it to take the revenue of any agency away and things. So there were those kind of concerns that we had to debunk and say, single window is all about trade facilitation, simplifying our import and export processes, which, in turn is going to increase revenue for the country, for everybody. So I would say those are some of the challenges that we faced, yeah.
Over now to Swateku for what's on the net.
Good day and welcome to What's on the Net. My name is Joyce Swateku. At Legal Empress _ is asking, one issue I have been expecting to address is the fast spreading that NIN is the new tax ID for individuals, while business registration number with CAC will be the tax ID for businesses. I haven't seen a clear statement made to clarify that. At Legal Empress, it has been clarified that the National Identification Number, or NIN, is not the new tax identification number for individuals. While identity systems may be integrated to improve data accuracy and compliance, the NIN itself does not automatically replace a tax identification number. Similarly, a Corporate Affairs Commission registration number confirms business incorporation but does not, on its own, serve as a tax ID. Any alignment between identity and tax system is aimed at simplifying administration, not imposing new taxes. At OB_Daniel is asking, good morning, no one seems to be answering this. I already got a tax ID for my Fidelity Bank, which is my salary account. I have other personal accounts. Do I need to get a tax ID for each of these accounts? FCMB, UBA, OPay, Access, and Providos. At OB_Daniel, Nigeria Revenue Service, NRS, has clarified that individuals do not need a separate tax identification number for each bank account. A tax ID is issued per individual, not per account. Once you have a valid tax identification number linked to your name, it applies across all your personal bank accounts, whether with Fidelity or any other financial institution. There is no requirement to obtain multiple tax IDs for multiple accounts. Over to you, Laurie.
And that brings us to the end of today's episode of Tax File. We hope the insights shared have helped deepen your understanding of the tax issues that impact your daily life. Remember, the discussion continues beyond the program. Connect with us on social media and share your thoughts with us. I am Laurie Bala Hassan. Until next time, stay informed, stay compliant, and keep watching Tax File.